Hey Fanshawe, my name is Julia Brown and I'm your finance coordinator for this upcoming year. Throughout this school year, we'll be releasing a number of videos on different topics within the financial literacy realm. Today, we're going to spill the tea on credit. Let's start with what credit actually is. It's a loan, and on these loans, you pay what is called interest, which is basically the cost to use someone else's money for your own purposes. Now, interest can be calculated in two different ways, simple or compound. Simple means the same percentage is taken off of what is called the principal amount. This is the amount you initially borrowed. Compound interest applies to the total amount you owe them at that time, including any interest that is already accrued. Meaning, you're paying interest on interest. Most credit products use compound interest. Now that we've established what it is, let's chat about how it actually affects you. Each person has an individual credit score. These scores measure your debt levels and payment histories to provide an easy way for financial institutions to assess your credibility in the future. Some employers even use a credit check as part of their hiring process. Alrighty. So now that we've talked about what it is and how it affects you, let's talk about the different credit products that you'll face as a student. First and foremost, the Ontario Student Assistance Program, better known as OSAP. Interest will begin on these as soon as you graduate or leave full-time studies on the provincial portion of your loan. Recently, the federal government created a 6-month grace period for the federal portion of your loans. Another common product that you'll use is a credit card. Cards vary in amount, usually referred to as a credit limit, and you can get cards that offer an assortment of perks, rewards, cash back, or even low interest. If they aren't specifically low interest, they're generally compounded at about 20%. And then you have lines of credit. These guys are generally compounded at 5 to 10%, and because of that, are harder to qualify for, and often require a co-signer. And lastly, let's have a quick chat about loan companies. If someone is offering you your first $400 for $25, know that there's a catch. The interest and loans on these fees are out of this world, often spiraling into the range of 500%. Just please do yourself a favor and don't do that to yourself. And now the most painful part of this video. Time to take your coin and put it towards your bills. There are a few things to keep in mind with repaying any type of credit product. Firstly, please at least make the minimum payment. And if you can, try and pay a little bit more than the minimum. That amount is mostly interest, so you'll be able to pay off less interest in the long run if you pay a little extra each time. And secondly, pay on time. Get to know your grace period. That's the time frame that you can pay off your purchase without interest being added. For credit cards, this is generally 21 days. If you pay late, it could impact your credit score. Put reminders in your calendar if you have to, but make sure that you aren't late. A lower score not only limits your options in the future, but it can also put you out of the running for the best products available, including the best rewards programs and the lowest interest rates. Lastly, why does this all matter? How can they track me anyways? The car company stopped calling me, so it looks like I've won. Unfortunately, it's not that easy to escape the credit bureau. Each company reports your payment history to the bureau, who then adds it to your individual report. It's what most institutions will pull when you come to them looking for a loan. Make sure it's looking clutch. So hopefully I didn't scare you too much with this video. Like I mentioned before, this is one of several that we'll be putting out throughout the year to make sure that you can have the best start to your financial future as possible. See you later, Fanshawe.